Hey T, how's your day going? Mm, so, hope everyone's having a nice day. The markets didn't have a nice day, but today so far wasn't that great, but hey, it is what it is. Is there a chance it'll come back? Of course there's a chance. Listen, stocks can move up just as fast as they move down. So of course, I think patience is the key, if you want me to be brutally honest. Patience, 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 and risk management. If you went into Fang, you're doing good so far with Fang. But Netflix, hey, we had a nice little recovery towards the end of the day. Let's pull up the 5 minute on Netflix. We'll get right into the meat and potatoes right away. So yeah, Netflix had a rough day. Luckily, I mean, I guess this is more so luck, but I didn't enter until today. Uh, and I didn't enter until like 10 o'clock basically. So 10 o'clock, I got in. You could see my entry. Hold on, let me pull up my Netflix. You can see I put on the trade here at 9:57 a.m. this morning. So if we go to a 1 minute chart, just to, what did I say, 9:57? So I got in right here. That's right where I got in. Actually, let me put on this. Do a cross. I got in like right there. So he did Fang and Netflix. I mean, Fang did good so far. Netflix, so you're putting on even more risk than I am, T. But we had a nice little recovery. I mean, not a full recovery, but we clawed back a little bit. The buyers stepped in at 3 o'clock today. You can see right here. Let me put this back to a 5 minute. Around 5 o'clock, my entry was here in the morning. I'll set this to like orange. Yeah, the buyers clawed back about like 4 points. So I appreciate you. You're enjoying the theory so far. I mean, listen, like this is the market. Like you're gonna have days like this. It's the first day of the year, first trading day of the year. Markets went down, and it wasn't like it was just an anomaly, right? It wasn't like Netflix only went down. I mean, look at the Qs. The Qs went down 1.7%. If anything, Netflix didn't even take that big of a hit compared to AMD, 6%. Look at Apple. I mean, Apple's it's the top stock, and it's down 3.58% today. And that says something. But I think it's a good buying opportunity right now. We may see continued selling for the rest of the week. We may not see any positive momentum or sideways. We'll just see sideways action until next week. No one knows. I don't know. You don't know. No one knows. You know. Well, listen. As long as your risk is managed, you're fine. I mean, really. Whether you're using a stop loss or I don't like to use stop losses. I just manage the trade from the beginning, right? So if I buy one contract of Netflix options, I'm comfortable with losing 99% of that money in that trade. So you definitely have to have a beefier account for certain symbols, right? Like Netflix. Patience. You gotta have patience. Like really. Um, and I don't think if this does turn out to be a losing trade, I don't think it'll be a 99% loser. I think, maybe I'll lose 50%, but we still have a good shot. It's just one day. But again, like this is one of the heaviest selling days on Netflix since, I don't know, probably back here, December 4th. So yeah, like try to keep your position sizes as small as possible. Like manage your risk. I may jump into Fang tomorrow. I may buy one contract of Fang. I'm thinking about it. I kind of want to, but I'm gonna go just one contract, just small, just to get in on the action. So I'll probably join in on Fang tomorrow. Hopefully it goes down. Sorry, T. Hopefully it goes down. I buy into the blood a little bit, but we'll see. But I definitely want to enter into Fang. Just buy one share. I've been kind of developing not a new theory, but using my same theory, right? Entering at the same strike, the delta, the expiration, or the duration, but going to the riskier side of the field. What do I mean by that? I mean by looking at the past like 5-6 years and then sorting by the highest median close for the month. And so far this month, Fang is the top dog, right? It wins 99. And I'm looking at winners for the past like 5-6 years, pretty much 6 years. So this is how I do this. I set this to January, has options, right? I always click that. I put that to 6 years minimum, right? And then I set the positive rate, so the positive close rate, to 90%. So I'm looking at everything that's 90% or higher. Why these are 112%, I don't know, but I'm just ignoring those. And then I just sort by the highest median percentage gain. And I'm just going to roll that each month. So like February, it would be TTD. For March, it would be AGI. For April, it would be True. And you can see these are all 100% gainers with the highest median percentage gain across all the stocks. Now you got to be careful. Some of these are lower market cap, but this is what I'm kind of looking at right now. And I just want to put on like literally the bare minimum amount I could put into the trade for each of these quote unquote riskier trades. Because they may have a higher win rate with good returns. But then like, my Netflix trade, the Netflix trade has much more data behind it, right? So the seasonality has a lot more data behind it, and it's also a bigger market cap, right? So it's less risky in terms of, the fundamental basis of the company. Netflix is a well-established, mature company. I think we can all agree on that by this point in 2024. So that's what I'm going to be looking at. So with that being said, Fang is one of those stocks, right? Like it's one of the highest positive closing stocks with the highest median percentage gain for the month of January, right? And that's what I'm going to look at. I'm going to put on a trade based off of that. Plus, Fang is a oil and gas production, and right now, oil tends to start seeing positive pressure at this time of the year. Pretty much from now until I think like July, basically when the summer driving season ends, oil tends to drift upwards. And then you throw on top of the geopolitical tensions, and I get like this could be a ethical conflict with some of you guys, but for me, if something happens in the Middle East, you could see oil spike pretty quickly, and that would directly affect a stock like Fang in a positive, as far as the price goes, in a positive way. I'm not talking, it's not positive for the world, I would say, but you got to play the game. You got to dance the dance. So yeah, I like the potential upside better than selling puts and calls and credits. Yeah. Well, you're always going to get the highest reward potential from going long on a call or put. When you sell a call or put, you're already defining your risk. Your risk is defined right off the bat. So, because you can only collect the premium that you sell. that's it. So right now, yeah. So the Netflix, I entered Netflix here at 1782. I wish I could have picked up like the 480, because the 480 strike was at like $2,000 at the low of day. But you can't time the market like that. It never works that way. So, but I'm in Netflix. I'm down 9.61% as of today. So, but, we got the whole entire month. We got what? 7. How many trading days? 4, 9, 14, 19. So like 20, 22 trading days. So there's a lot of time. We still have a lot of time, I think. And this is where like the patience and risk management mindset come into play, right? If you put in this money, if you put money into this trade, willing to lose that amount, you should have no problem holding it for 30 days, in my opinion. Some of you may disagree, and that's okay. And you could tune your own strategy, tune your own preference to my strategy. I wouldn't even call this strategy my strategy. This is just the most basic option strategy you can use. I think the hard part is finding the patterns in the market and identifying patterns and actually applying the strategy to those patterns and trends. So. But yeah, I bought this for 1972, and right now it's sitting at 1782. So down a little bit. I've seen worse. But right now, we're sitting in this, and then tomorrow, I should have entered this today, but I didn't. But I'm probably going to enter FANG tomorrow. I don't know if I'll post a video about it, just because I don't want to confuse people. But for you guys who watch my streams, you'll know. You'll see. Like, you'll see that I'm in it. I'm not going to post a video about me entering this trade solely, like about this trade. But next time I post a video on Netflix, or I do a update on Netflix, Marvel, or these two guys, FANG and Marvel, I'll mention that I'm in the trade too, for FANG. I should have mentioned it earlier, but I kind of decided on it like tonight that I would enter FANG just after seeing the potential profit. And today it did pretty well. Just because FANG did well today on a down market, overall down market, doesn't mean it's good. If you look at the beta here, the beta is below 1. So FANG tends to do better when the markets are more so flat, if you understand how beta is calculated, how it works. So, but yeah, if you think oil prices are going up, then FANG is definitely a good play. Let's take a look at the overall markets, because I don't do this enough. It's the Dow Jones. Dow Jones keeps making new highs. It made a new record close today, I think. I think it did it by like 20 points. It was like very close, yeah. So it had a new closing. It actually made a new high, all-time high today, but then it made a new higher close today. So Dow Jones is moving up. The SPY pulled back a little bit, of course, about 0.5%. We do have Fed minutes coming out tomorrow, which is probably one of the reasons why the market was a little shaky today. I think there's a little bit of money moving around just because of the new year. But we do have Fed minutes coming out tomorrow at 2 o'clock. We also have the ISM manufacturing. Let me pull this over here. So we have the ISM or PMI coming out tomorrow at 10 a.m. And then we have the FOMC at 2 o'clock p.m. So 2 pieces of data that are going to move the market somewhat. Definitely the FOMC minutes. If we see rate cuts going into the later half of this year, you may see the market see a little rally tomorrow. So you got that. And then Let's see if there's anything else for Friday. Friday's going to be a little bit of a volatile day too. We have the employment numbers coming out, unemployment rate, hourly earnings, ISM. So those are all big pieces of data that will move the markets. So that's what we have lined up for this week. Not too crazy. I think the FOMC minutes will be the biggest piece of data to come out. And again, FOMC minutes are just where all the Fed members are standing on interest rates, if they're going to cut, if they're going to raise, if they're going to hold neutral. So it gives us a little bit of a forecast / insight as to what they're thinking and saying going into the future. So that if we see some surprise FOMC minutes come out tomorrow, don't be ready for the market to move a little bit. Hopefully in a positive light though, because I definitely want to see Netflix print some profits, as we all do. But yeah, kind of a rough day. Again, the Qs. This was kind of a market-wide sell-off. Of course, LOY is going back up now that I exited the trade. It's almost like someone's standing behind me and knew I exited. I'm just joking about that, but yeah, LOY does tend to do better when the overall market is underperforming. You could see that with the beta here, 0.23 beta. A beta of 1 or more usually means that the stock is more so correlated with the S&P 500, and with a beta below 1, you start to see less correlation. And then a negative beta means when the market goes down, the stock actually goes up. So like a good example of that would I don't know if there's beta on TQQQ. Let me check. I don't know. SQQQ. I'm looking at the wrong one. The short ETF. I don't know if they have it on here. Yeah, so like negative beta. So the SQQQ, if you don't know, it's the QQQ, but the short version of it. So if you think the QQQ is going to go down, you would buy SQQQ. It's basically a short version of the Qs. And you can see the beta is negative 3.39, right? And this is a 3x leverage ETF. That's why it's 3 times the correlation of the S&P, or the Qs, I should say. So, well, actually the S&P. That's the benchmark. So, yeah, so that's why LOY went up. And again, like FANG is also a lower beta, 0.57. So the correlation's a little bit less with those stocks. So when you have a day like today, right, the stocks tend to be more positive or less moved by the overall theme. But a couple stocks took a big hit today. Apple got a downgrade. But we'll see. I think this is a good buying opportunity on Apple. You could see every time Apple pulls back. I mean, even during 22, it didn't even pull back that much. I mean, it did pull back a decent amount, but it kind of stayed in a range. You can see I have these levels drawn out. These are all bounce levels, potentially support that I'm looking for. We could see some support on Apple at like 180. If not, then it would be the 177 region. Below that would be 172. So those are the levels I'm looking out for. That's just based on volume. But I would also look at this level here because I see a couple rejections in price in this mid area. So, but Apple took a big hit today. They're talking about their phone sales not doing as well, and they're predicting that their next iPhone to come out next year or this year, later this year in September, I think, or October. They're expecting sales to also be about in line with what we're seeing right now. So that kind of scared off investors, and that's why we had a little bit of a plunge today. I think it's a good buying opportunity regardless. I think if you buy Apple right now, you'll probably be up, 20-30% over the year to date gain. So not financial advice, of course, but again, NVIDIA still hitting up against pounding on the ceiling here at the 500, big psychological level, of course, too, but also a resistance level. NVIDIA is trying to bang on the ceiling here, trying to go higher, keeps getting rejected. But this thing seems to be squeezing upwards. We keep getting higher lows, I'd say. I mean, we did have some volatility back here back in October, but since November, it went on a rocket ship. But we did make a new higher low here. So hopefully we can find another higher low in this area. If not, or maybe sooner, we have a break upwards to over the 500 level. So Nvidia looks like it's trying to squeeze higher, even though it had a pretty bad day today. Not horrible though. So what else? AMD was one of the biggest losers today on my list. Came relatively close to hitting new highs. I think the new high price would be around 164. We only got up to 151, but down 5.99% today. But coming back into this area, we could throw up a volume profile just to see where this thing is sitting. So right now with the volume profile, we are at support. We are at a area of interest, whether it be support or resistance. Right now it should be acting as support since we're coming back down into it. I don't know if much of you are believers in gaps, but gap fills. But we do have, just to be aware, we do have, whoops, let me throw on this. We do have a gap right here that we created this morning. So maybe we'll see AMD find some footing. Right here, it may come lower to the 136, but maybe we'll see a bounce off of this in this region right here. Let me turn off my magnet and see a bounce higher to fill this gap. And maybe we'll hit new highs by the end of this month. So watching that on AMD. No trades on AMD, of course, but that's just a little bit of my take on what's going on right now. And yeah. We could look at Marvel. Again, Marvel, another semiconductor, just like AMD, took a nasty hit along with the rest of the sector. So down 3.55% today. Also came below the $50 or the $60 level here. Came back below. Now, just to be aware, I know I have the 60 level marked here, but if I'm looking here, right, I see support here, support here, support here, and resistance here. I should really have a level drawn out right here. We get a horizontal line. I really should have a level drawn right there. So we could be looking at support. We did bottom wick towards the end of today. So we could be finding, Marvel could be finding its footing around this $57 area. We could wick lower, but if I were a buyer on this, or if I were in the trade for Marvel, and I did recommend this as a buy for January, I would want it to see it hold this level. This seems like a pretty important level. And from there, maybe we can get back up to 65 by the end of the month. So that being said, we'll keep our eyes on it. Back to FANG. FANG was one of the only stocks that did well on my list today. Again, this is another one I suggested last week. It's one of my top 3 picks. Yep, one up 1.25, and almost touched this 154 area. You can even argue this is a little bit higher, but we did. I'm going to move this up a little bit just to include these wicks here. Right here I'm looking at. We did break through this level, came back down, retested on Friday of last week, and then today we see the buyers stepping back in. So FANG, if anything, FANG is probably the best looking stock on my list. So yeah, if we can break above the 150 or 160 level right here, this 160 level, if we break above that by, let's say, this week or next week, I think we're off to the races and could be looking at new highs for FANG this month. So this is looking like a really good, decent setup. It looks like we're trying to form a new higher low here, which may have already been put in. So just another reason why I should probably enter FANG tomorrow. It'll be at a 44 DTE when I do enter it, but I do plan on holding it to the end of the month, just like my normal trade plan for any other stock. So that's about it for the update. But starting off 2024, a little bit lackluster, but hey, we still got plenty of time for the rest of the month to play out. And I think it'll be a good month. I think the only silver lining, at least for myself, I don't know about you guys, if you entered the trade on, I know a couple of you probably entered on the 29th. I entered today. I did enter, like I said in my video I posted earlier today on Netflix, I did enter around 10 o'clock, 9:57. I did show the trade down here just to show proof. Not BSing you guys. 1/2/2024, 9:57. So that's when I entered here, and I thought I got a good price. I think the price was down about 3% when I entered. Let me measure it. It was around like 3%. Yeah, pretty much spot on 3%, 2.98. You know, and I thought, hey, you know what? Looking at other days, like I was looking at the daily chart when we were down that much. I was looking at the daily chart and I was like, yeah, we haven't had a 3% down day in a while. And it doesn't happen that commonly. So I'm like, it's probably going to reverse. And it didn't reverse. I think the last time we went down 3% was back in October. It didn't reverse. If anything, it kept trending downwards, but that's okay. I was happy to see this towards the end of the day. That's always a good sign when you see, you know, a sell-off and then you see a retracement back up. It does help a lot, this little piece of price action, because it shows you that the higher volume, you got to remember, the volume, if you know anything about volume, you have high volume in the morning, pretty much until like 10 o'clock is when the volume starts to taper off. And then the volume starts to pick up again around like 3 o'clock before the market closes. And usually when you see the higher volume towards the end of the day buy back up, it means that the institutions or the bigger players are scooping up Netflix at a discounted price on the day. Whether they're holding it for just one day or a month, you know, that's a positive sign that their buyers are stepping in on this higher volume. So that's good. I think Netflix did go up slightly post-market, but nothing significant. So that's pretty much it. So is anyone else in any trades today? Any good wins so far? I had someone comment on one of my videos that they're in something and they're up like 10% so far. But hopefully we could start 2024 out strong. Definitely be nice. And then Fang I'm going to enter 510. We'll enter at 510. Hopefully it's somewhere around here. No problem, Hillary. I don't know if anyone noticed my my sound quality, or I should say my microphone quality, sounds better. At least I think it sounds better. I got a nice microphone stand, you know, like a big arm that attaches to the desk with a pop filter. So I think that's helping a lot with my quality, content quality, as far as my voice sounds. So seasonality on JD, yep, I can look at that. Just put in JD here. So JD for January is a good stock, I think. Let's see, 80%, so it's good. We'll look at the median return, decent median return. So far it's down this month. We'll look at the charts here, price out, we'll get some levels priced out. I've looked at this chart before. This was actually a stock that you can short or buy puts on in September. This stock performs horribly in September. You can see here. Look at the median return in September. I've actually considered implementing JD because I haven't gotten up to September yet, at least with my channel trading. September, I don't put on any trades, believe it or not, because it's such a horrible month for the stock market. I don't put on any trades for September. But I was looking at JD as a potential put entry, buying puts, going short on JD. But I didn't know that it did this well in January. Let's look at the monthly performance again. Yeah, like 80%. So, yeah, no Roomba vacuum. That thing is loud. Does a really good job though. Gets a lot of the dog hair. All right, let's look at JD price levels. So again, like this thing took a spill, and it's a Chinese stock, if you don't know. So just another risk to be aware of, right? This company is headquartered out of Beijing, China. So if there's ever a geopolitical tension, or I mean, there already is, but if there's something that happens between the U.S. and China and economically, this is probably a stock that will get wiped off the exchange, at least here in the U.S. So just be careful of that. That's just one risk. But most likely, if you're just swing trading, you probably don't have to worry about that too much. But that risk is still there. We are at the lower ends here for JD. I'm going to throw I don't want to use that much data. Let's use this. Yeah, see, we spent a lot of time down here. This is probably like its median price, if anything. So what I could do is actually take the volume profile from the dawn of time to now. Yeah, so the point of control is right at 25. So big support right here at 25 bucks. Like that's big support. And then of course at the top of the range you're looking at like 29 bucks. And then maybe if you go below that, 24. But $25 or $25.57, give or take. If you see price come there or below it, it's typically a good buy. The point of control in the volume profile you typically bounce off of, especially a point of control that goes back to like 2014. A lot of buyers, a lot of people holding the stock. From most people that bought this stock or transacted the stock bought it at like $24. So big support down there. Luckin Coffee, yeah. Got the list of these for. Yeah, I'm a pro member, I think. I think I have TradingView Plus. I think that's the tier. There's a couple different tiers that you could buy. I think I have like the mid tier. I think there's one more package I could buy. And then like I think I pay for like CBOE. I think this is CBOE or CBOT futures data. I pay for futures data too. Because I think if you don't pay for it, it's like 15 minutes delayed. So I pay for that data. It's cheap though. It's only like $1 a month. But I think overall, I spend like I usually do the try to do the Black Friday deals with TradingView. They always do Black Friday deals. Back to JD though, it does have seasonality. So far, that seasonality is not playing out. We're down 5% for the month, 5.85. But if you think it's going to go higher, right? If you think it's going to go higher, JD is probably a good buy right now. You buy the blood. If you buy into the blood or buy into the selling pressure, you're going to put yourself at a better risk to reward if you think it's going to go up, because you're buying at a theoretical discounted price. So if we look at, I'm going to look at volume profile on a more smaller window here, but you can see the volume profile as far as recent times. You got support right here, and what I'm doing is I'm looking at these top nodes, and if anything, I could probably lower down this to like, I don't know, 100. That's better. So you can see right now we're below the point of control, which is indicated by this red dashed line. So anything below $27 is a discount area. And if we do come down further, 27, 26, 27.07, 26.67. And I think if you really want to get a deep discount, then you'd have to wait for like 25, the 25 area. But if you think it's going to go up this month, then I think it's a good buy right now. And this stock does perform well in January, right? So it's a good option, no pun intended. Of course, I think the options chain is pretty good for. All right, so if I was looking at this, now this may be, I know I'm going against my strategy here a little bit. I know 0.39 is closer to the 45 delta area that I like to be in, but a stock like this, I'd be more comfortable with going with a 0.52 delta. The good thing is JD is a cheaper stock or a cheaper option contract, only $170. So you'll definitely put the odds in your favor if you go with 0.52. So, but it's up to you. If you were going to enter, I would probably go with the 27.5 strike. Yeah, the volume profile is a nice tool. It's a nice tool. It helps you identify levels. But like if I didn't have it, you don't need volume profile, believe it or not. All you have to do is just look at where price recently rejected and found support. So like if I just look right here, I'm looking at the major pivots. So like right here we had a major pivot. Major pivot right here. Well, it was major, but it was a short-lived pivot, right? It came up and then slammed down. But look what happened when we came back up to this area. We found resistance and came back down. Old support is new resistance. Same, and vice versa. Old resistance is new support. So like right now, without even using volume profile, I can mark this level right there. Some people use lines. If you don't like lines, if you could shade the area, so I can include the majority of the wicks. So I could shade an area like that if I wanted to. Okay, so like if I'm gonna sell JD, let's say, or buy puts, which I wouldn't advise doing for January because of seasonality. But if I were going to, I would want to short up into this range, this zone between like 28.90 and 28.36. So, but what just happened today, we got rejected again. Right, so we had support here, slightly, broke through it, came back up, resistance, came back down, came back up, resistance. Look what's happening. Now, I don't know if it's actually going to break down and continue to go down. No one knows. But if you told me, hey, I want to buy this stock, I'd probably draw a zone down here and say I wouldn't buy it until you get to at least $25. Okay. And that may happen. This is a volatile stock too. Like this is a small market cap. 40 billion isn't that big, okay, compared to the overall market. You could see this thing come down really fast, and it has come down really fast in the past. I mean, look at this. You went from $28 on, or like, let's call it, yeah, you were at $28. You passed through the $28 level here on October 12th. And by October 23rd, which is only 11 days later, you're already at support. So, you could see this go from, at $28, $29 down to in the next 11 days or 5 trading days, you could be down here. So it can be quick. That's why it's important to set alerts and know when your levels are being touched. But again, this is just technical analysis. Support and resistance is just another tool in our toolbox. This thing could easily tomorrow, some news comes out, something with the Fed, I don't know, anything, a million different reasons could occur or opportunities can occur tomorrow, and this thing just rallies for the next month. Who knows? But you should be aware of these levels, right? Just be aware of what's going on here. So we are technically, right now, we're ranging. Whoops, we are in a range right now on, wow, my trading view is lagging really bad. Whoa. What the hell is going on here? I've never had trading view do that before. We are ranging right now. That's what it's looking like. That's like what it's looking like it's trying to do is go back down. But it may not happen. Just be aware of that. It could be a double bottom. It definitely could be a double bottom. Technically so far it is, but I think technical patterns like ranges and stuff, they only work so much. They aren't the end all be all. It's a pretty tight range though. Now the one thing that is holding this price up right now is and this is where volume profile is good to use. You see this massive volume candle right here on December 15th? Guess where the highest, all volume profile is? It's taking this down here and putting it on a y-axis on the charts. You could see that high volume wick right here, or the high volume candle that occurred on October or December 15th. Could be acting as support right now. Even though we're below it, it could be acting as support. So this could go higher. Like, don't lose faith on it yet. Man, I've already been streaming for 45 minutes. Time flies when I'm on here. I like get on stream, start talking, and then before you know it, like an hour passed by. So I was going to introduce a new concept tonight, which I kind of did already, but I want to go over it in Thinkorswim On Demand. So here's the quote-unquote strategy. Using the same plan, entering on the first day or the last day of the month, exiting on the last day of the month, 45 DT, 45 delta, you know the gist. But instead of using like a 20-year back testing, I use like a 6-year minimum and go after the highest percentage positive closes with the highest median gain. So for like January, it would be FANG, and this is how I would do it. I'm going to back test, so we're going to use previous market data. Okay. And I'm going to type in FANG, and I'm going to go to, let's say we start off on January 3rd, 2023, last like 10 minutes of the day. Thanks. I also noticed Docu does well in January. Does it? Let's see. Getting sidetracked here, but that's okay. Let me pull up another. I'll use this for a moment. Docu. Yeah, 67% of the time for Docu. So it's got seasonality behind it. We can also look at the... I like Unusual Whale site. I'm starting to grow. This site's starting to grow on me more than this site, but I still use this. For January, the monthly performance, yeah, it's like under 70, which 70 is like the sweet spot. I like to be at 70 or higher, especially on a longer sample size of data, like 20 years, let's say. Median returns are subpar. Okay, I mean, they're not horrible, but it's there. So far this month it's down, so we went down 2% today on Docu, but if you think it's going to go up, it would be a good buy right now if you wanted to buy into discount. Could be a good trade. But as far as... let me, before I get sidetracked, let's go over this. So what I'm going to do is I'm going to buy Fang. I'm going to set this to all. Okay. And I'm just going to buy one contract. Just to keep things simple. Go to the end of the month. All right. And we'll see how much this is. Looking at this figure right here, P&L percentage. So Fang this time last year would have returned 97%. Pretty good. And then what I do is I go to the next month using the same criteria right here. Sorted the median percentage gain. You can see TTD. This says over 100%. It's just a bug. But you can see for February, now we're looking at February, right? You can see 100% of the time, Trade Desk, this is Trade Desk stock if you're not aware of this one. This has gone up 100% of the time in all the past Februarys, right? So, with that being said, I'm going to go to, now it's the end of January, right? January 31st. I'm going to put in TTD. Again, using my same trading plan, I'm going to go to 45 DTE. Whatever's closest to the 45 delta, which would be the 55. Enter that. Fast forward to the end of February. See what the results are. Again, I'm looking at this figure down here. Whoa, there we go. We made 3%, so it would have been pretty much a flat month for this one. Right, and I could have told you that just by looking at this right here. So February, 9%. Then the reason why it only went up flat, unless I put on the wrong data, but no, it should have went up. But it was probably because of high IV crush. I guarantee you it was IV crush that caused us to have pretty much a flat trade on that one. Seen that a million times. All right, let's go to March. AGI, which is a gold mining stock. I would just go to AGI. Again, select the 52. This one's tricky, right? Because you have, out of the money, it's 10 cents, which we could do, but it's risky. Look at the delta. Like, that's very risky. So I would be more comfortable with going with a in-the-money trade for $80 here. And then fast forward to the end of March. See where we're at. Same thing. You got True here. You have a couple different options. You have TransUnion, right? You have Shopify for April. So I'm probably going to go with the highest one, which is True. We go with True. Now, if the options chain looks funny, then I probably will just select the next best one below it. But we could do Shop if we want to. Let's see the IV on it though. 55. Shop. Now Shopify is a bigger market cap, which is a positive. Look at what are we doing? April, 2%. Well, when I was doing this testing, I used True, so we'll just stick with True. We'll stick with True. All right, I'm going to enter the 0.41. Fast forward, end of April. Now, this is a much riskier play doing this, but it's more consistent. You get more consistent gains. So is it better? It could be, but it's more risky. 122% gain. Because we're going after smaller market caps, right? I don't know if you noticed, but I don't have a minimum market cap set on this. So you're seeing companies that are 7 billion, 8 billion. So hey Steve. Yeah, if I was gonna do a leaps, I would probably do it for like tax purposes, do like a long term, like over 1 year, so I get the long term capital gains tax benefit. Um, never done a leaps contract though. Never messed with long term equity options. Maybe if I have more money, I'll do it. Usually, people that put on leaps, it's because they have a lot of capital, and when you go into a leaps contract, there's usually enough volume or market liquidity to fill those orders. That's why you see like Nancy Pelosi put on, or her husband, they put on like options calls on like Nvidia like 8 months out. That's a very common strategy used by hedge funds and money managers. Where am I on here? True, go to May. So like for May it would be MCK, right? And you can see for May, look at the amount of wins it has, right? It's very... So this is the high win rate over the past 5 years, basically. But it's riskier because you're only using the past 5 years. Now, if I try to go like for the past 10 years, it becomes harder and harder to find stocks that tend to perform that well in a short time period, if that makes any sense. Or a longer time period, I should say. So adjust the time. Steve, what trade do you have on right now? Any trades so far this month? Whichever one you have on, I'll analyze for you. Is this thing going? Oh, did I not put on the trade? The heck? Oh, I put on the wrong. Let's go back. I selected the wrong contract. You're in Coca-Cola right now? I'll take a look at that in a moment. Didn't mean to buy this one at 21. I want to buy it at a 49 DTE. There we go. Let's see what the gain is on MCK. 134%. Very good. And this is all I'm doing. I'm just going through each month now. June. So June would be Carvana. And you get the point. So I'm thinking about doing this strategy, like using a very small amount of my portfolio, buying options on this strategy. So going after the shorter term seasonality, which does have a high win rate over a shorter time period. So I'm kind of messing around with seasonality a little bit more. But my main strategy that I promote on my channel to you guys already, I'll always be doing that. But this, I kind of want to start experimenting with. And I was debating even showing you guys this because I don't want to confuse anyone or get anyone hurt, because this is risky. Like, you got to know what you're doing, and you got to know how much to risk and how to position size properly. Like this Carvana trade would have made 500%. Would have been a nice gain. You get the point. So like, pretty interesting. And the benefit of this is every year that goes by, it's constantly updating for a stock that's 100%, instead of just blindly going into Coca-Cola, or not Coca-Cola, but like Netflix every January, which is still a good strategy year over year. But so I'm going to be experimenting with this setup, like looking at like the past like 6 years, with a very, very high positive close win rate with a high median percentage gain. I think these two metrics right here coupled together can make for a great, consistent, high-paying strategy. All right, let's take a look at Coca-Cola. Wow. Nice day on Coke. Again, Coke's one of those, like I was saying before, beta. Look at the beta. 0.17. What does that mean? It means that Coca-Cola tends to do better on days that look like this. Right? The S&P's kind of flat, down 0.5%. Coca-Cola is not as correlated to the overall market. It is a big cap, though. It is a big name, but it's a nice stock to have that goes against the grain a little bit. All right, so let's do an analysis on Coke. So I'm just going to use this site, throw up Coke on a seasonality basis. Monthly performance. All right, so you're 50-50, although let me just check. Let me check this site here. Over a 20-year period. All right, so it's 40%. So seasonality, let me back this off so it doesn't include 2024. 35%. Going against the grain a little bit here. That's okay. Let me look at median return. So if anything, Coca-Cola is a loser typically in January. So be careful, Steve. Be careful with Coke. You are reaching previous highs here. Or not, well, previous local highs. Okay. And you did just bounce off of a resistance level or a support level here. So you can see this level goes way back. Maybe better to look at on a weekly chart. You can even argue the support's like down here. But I'm using this because I like to look at this too. You can see you found resistance or support, support, support. You broke through it. Resistance, tumbled down, came back up. Slight resistance, short-term resistance. You broke through it, came back down. Support, right? Old resistance. Old resistance is new support, typically. And you're coming back up now to this old high at $60. So very nice setup on Coca-Cola. Although, you know, Coca-Cola is you got to remember, Coca-Cola is a slow-moving stock. So this may be the bulk of the move right here. If you caught this, congratulations. Yeah, resistance at 60. I would recommend selling at $60. Now, if there was seasonality behind Coca-Cola, if I saw positive seasonality behind Coca-Cola, I would say, okay, maybe hold it. But I've watched Coca-Cola for a long time. I know how this stock reacts. This stock likes to range. Loves to range. Man, my trading view is not working tonight. It keeps lagging like crazy. Coca-Cola loves to range. Loves to do this. You know, if you show me like Nvidia or Netflix or A&D, you know, those stocks usually do this over time. This stock, look at it. It's like up, down, up, down, up, down. Different animal. So just be aware of that. And there is some resistance. I could throw up a volume profile just to see. Yeah, so you got to back above. So right here, this red dashed line is the point of control in volume. So this basically represents the highest amount of transactions, like shares being exchanged, right here at $58. So you came below it, you found support, you came back above it. And now, let me set this to like 200 just to get a better view. So if you do think it's going to go past 60, $61. I'd be looking at 61.38 pretty much. Maybe even a little bit lower if you want to be more conservative. Like right there, like $61. So you could squeeze a little bit more out of this if you think it's going to go higher. If you do think it's going to go higher, expect to see some sluggish price action at $61, if not $60. Also, $60 is a psychological level. Whole numbers are usually like 60, 65, 70. Those whole numbers are typically psychological levels, and you do see some rejection or support at those levels. So, but nice move, nice trade. I definitely take profit though, just knowing how Coca-Cola is. So, but it may do well for the rest of the week. Remember, if the stock market continues to act this way overall, Coca-Cola will probably continue to rise. It's just one of those stocks, just looking at the beta, it's one of those stocks that tend to perform better when the, let's just say the tech sector underperforms. Coca-Cola does better. So, 62. Let's see, 62. Yep. Yeah, and like exactly. If you're gonna go above 61, I would look at 62. So, and why? Why is that? Because we typically, whenever I like pray or put a horizontal line, and I'm sure you do the same thing too, Steve, just by you saying 62. I try to include all the top wicks. I try to get the bulk of the move. I'm not really worried about trying to catch the tippy top of resistance. I'm more worried about the bulk of the move right here. Right, so every time we come above this level, we start to see reversal in price. We rejected $62. Technically 63, but right, an average rejection area, $62. We've rejected it 5 times. So, just something to note. Yeah, it's definitely testing 60. I mean, that's a strong move for Coca-Cola. I mean, this is probably one of the strongest moves it's had since what? October 30th? So there's a good chance you get above 60 within like the next day or two, by tomorrow or Friday. What's today? I mean, Wednesday, Thursday, yeah, next few days. But don't be surprised if this gets rejected after it hits 60. So, nice trade though. We'll take a look at NEO. We got NEO. Came down into that area of support. Chopped around for a while though. Chopped around for quite a bit of time. Let's just say the level's right there at 734. We were sitting here for how long? We touched it on October 23rd, and we didn't leave until 55 days. So from October till mid-December, we just chopped. And it finally broke out. But again, took a big spill today. 7.17. We'll look at seasonality for NEO. Monthly performance 50%. So in my book, under 50% or under 70%, I'm not feeling comfortable with it. It's more of a coin flip. I'm not a coin toss. I'm not saying it's a bad trade for this month, but I wouldn't say it's a good one. It's kind of a I don't know. Trail stop at 10%. Yeah, that's probably smart. Are you trading shares on this? Oh, you're okay, no, you're not trading shares. You're trading options if you're up 60%. Yeah, that would be smart, doing a trail stop after 60 if you want to manage your risk. That would not be a bad idea. But yeah, NEO took a hit today. Delivery data. Alright, so this is news-related dump. So yeah, definitely, so upside potential for NEO right now. Just going to use a volume profile. I don't want to use too much data. Let's go back here. So let's use more recent data. I think that'll give us a better picture. Point of control is down here at 781. You could be looking at support here at pretty much where the price is right now. NEO came down to this node, this volume node at 845. Right above that, you have 883. And then up there, 920. And then after that, you do... Now, here's the one thing to note here, and this could easily play into NEO going up more. You have a nice gap right here. Look at this. That's a gap. See this? That gap. Now, if you believe in gap fills, which I do believe in gap fills, but they could take a while for them to generate profits. It could take a while to get back up here, but I do believe gaps fill eventually. You have a nice big gap on NEO that was created back in September. So a lot of trapped buyers right here. And if we do fill that gap, it would probably be 940. What's the upside on that? Let's just assume we bounce. Could be looking at like a nice 22% gain. But that may not happen until June. Like, we could, just using seasonality for a moment, like NEO typically underperforms this time, like the first half of the year until June. This is just like Tesla. Tesla's the same way too. Tesla does very well in like June and July. And like right now, Tesla, it kind of takes a while for it to get its feet. But like NEO right now, I'd say it's a good short. I mean, this thing is drilling hard. I think this is a good short. I could be wrong though. But if you do short, you're probably coming back down to this point of control right at 784. Yeah. I mean, where were we back in August? Wow. I mean, I could be wrong. I could be wrong because every time, let's take out this volume profile for a moment. Every time NEO breaks out of these, now I'm not a big believer of trend lines, but I'm just going to use a trend line here, for example. Every time you break out of these downtrends, you usually get a nice rally, which I think already happened with NEO, but it could be going higher. You get these nice rallies when you break out. And we were being compressed. This market compressed NEO. I'd even argue like it's like that. I'm trying to get the most amount of touches. So basically since December, NEO's been rising. You know, every time you break these trend lines to the downside, especially for a month, you know, and you have a gap right above it, it's a good opportunity. But I'd be careful. Again, it's a low market cap, and NEO is kind of one of those meme stocks. Not a meme stock, but it is like a big retail stock. So, you know, money, market makers and hedge funds, they love to take advantage of the retail guys, the little guys. So be careful with the stock. $8 accumulation. Yeah. Yeah, like the point of control, I think I marked right here at 781. 781 is a value area. So if I were to buy NEO, I would want to buy it under pretty much $8, like you said. So, yeah. That's cool. What else can we talk about? Crypto's been going up. Bitcoin keeps making new highs. Well, local highs. It's not quite up to its all-time highs yet, but it's getting up there pretty quick. Moving up fast. What else? Gold's down. See, these are like my defensive portfolios. Look at all my defensive stocks. Up, all green today. Those are all the low beta stocks. Tomorrow I'm going to enter FANG. I'm going to put on a FANG trade. Hold it for 30 days or less than 30 days. 29, 28, 28 days. So I'm going to look into that. That's pretty much it. So probably going to pack it up here. We'll do one more for you, Steve. You know what, PLTR? Let's do it. We'll do this one, and then we'll shut it down. I'll probably be back on tomorrow evening. So it's already 9 o'clock at night. Jeez. All right, PLTR, Palantir. Right away, I'm going to look at the seasonality just to get a good idea. I like to look at seasonality right off the bat just to get a good idea of what the stock typically does. Now, the only thing with PLTR is it's only been around for a few years, so the average returns, let's look at monthly performance, so 50. Again, a stock that, you know, doesn't have seasonality, if I were to buy it, I'd probably be looking $14. If it goes below $14, then definitely $13.85. $14.65, $13.85. Above that, I'm going to throw on the volume profile just for this part. You're in this one too, T? All right. Well, we're looking at it right now, so. All right. So I just marked a couple levels down here based on price, but based on volume levels, your point of control right here at 1537. So if the worst comes to worst, you want to see price bounce right at this area down here. Now we are at a high volume node right here, pretty much at 1655, so we could see a bounce right here. Could see a bounce. Here's the other thing. Huge gap right here. Big gap. Be careful. Like, be careful with this one. Big gap, and it's trying to fill it. You could see, like, we're trying to fill this gap. We came down here, and now we're finally breaking into this big gap. So, thought about put yesterday. Yeah, it may be a good put. It may be a good put play. Like a short play. If you do buy puts, I'd be targeting 1536. If you want to play it a little bit more conservative, 1550. Use a psychological level. 1550 is a psych level. That's where I'd be looking. Nice put play. Head and shoulders. Yeah, I don't use market patterns. If you find head and shoulders to help you, use them. All I know is I don't buy their shampoo, so I'm just being wise. Is there head and shoulders on this? This technically is not a head and shoulders, and I know this because I tried studying chart patterns. I was at my phase. If it were a head and shoulders, you want to see the neckline. You need to see the neckline be congruent. So head and shoulders looks like this. It'd be right head, or the shoulder, head, shoulder. That's a head and shoulder. Right there. Let's change this color for a moment. Basically, you want the neckline, which this is the neckline right here. You want all the neckline points to be, or at least here and here, to be flat. We don't have that here. We have a gap in between us, so I don't know if you're trying to look at like this as the head and shoulder. I don't know. But that's technically a head and shoulder right there. But the main, you know, criteria you need for head and shoulder is this. These two main points to line up nice. You need that neckline to be perfect. So, but you could be right. Listen, and look at the yeah, it is in a downtrend. I'm not arguing with you that it's bullish by any means. This is bearish, and we do have a gap right below this. So more than likely, whether it's a head and shoulder or not, I think you're correct as far as the downtrend goes. And I obviously concluded the same thing in my quick analysis right here. So, but very good find, very good put play. Awesome, awesome, awesome. So yeah. Then the downtrend line, yeah, and it is respecting the downtrend, right? Just like that, right? So I like to use like a 20 SMA, nice 20 SMA. When it's in a downtrend, you'll reject off the 20, and when you're in an uptrend, you find support at the 20 SMA. Listen, there's a million different ways you can skin the cat. Trend lines, candle patterns, candlestick patterns, moving averages. So, but yeah, definitely look for downside on Palantir. And this stock ran up. I think I remember looking at this stock when it went up 20% in one day on earnings, because this was the same day that AMD earnings came out, and I made like 10% in one day. I caught this move. So when I looked at the downtrend, hold on, I gotta pop out the chat here. When I looked at the downtrend, trend down, I saw head and shoulders. Yep. Listen, if you see it, then yeah. I don't really see a head and shoulders. All I see is unless you're looking at like this would be it, but like here's a perfect example of a head and shoulders not working. Like, I'm gonna remove all the drums for a moment. This would technically be a head and shoulder right here. Shoulder, head, shoulder. Look what happened. What happened since that? Price has only gone up. We didn't break down. So I don't know. That's why I don't like using patterns, because they're hit or miss. Just like an indicator, even a price level. Price levels can be hit or miss. Kind of got to use everything. Got to use all your tools at once, in my opinion. So, all right. Well, I'm gonna wrap it up here. Thank you all for watching. I will probably stream tomorrow. I think I'll be around tomorrow night. So be sure to have the bell notifications on and subscribed, and that's about it. All right, guys, thanks for watching. Have a great night, and I'll catch up with you guys soon. Peace.